Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look at the gold market. So yesterday, as you could see, we've got not really pleasant surprises, at least depending on the side that you are trading on. So if you would like to take the long position, this will be not very pleasant surprise. If you're watching chance to go short, that probably might inspire you. So this is bearish grubbers that we've got. So actually only one is already completed, but based on today's performance, you could see what has happened. So previously we have discussed in the weekly report as well that recent rally on the gold might be the result of the intervention of Bank Japan when it was big amount of United States dollars have been sold, which brings some short-term weakness in the currency and let markets, forex market and gold in particular, show the bounce. Once this support now is totally absorbed by the market and exhausting, it's turning down once again. By the way, guys, as we have mentioned in our Telegram channel and spoken about the recent intervention from the Japan, they have burned approximately $50 billion. And just imagine the scale. So just the $15 billion on the market was let gold show this performance. What has happened when China will start to sell United States dollars? And as you know, at least we will put this information to the channel in Telegram channel as well, that they turn to the fixed renminbi rate to the United States dollar. They have pegged it and the lowest level since 2008, and to support this ratio they will have to sell foreign reserves. Bank Japan probably will follow as well, and other central banks also could follow to this practice just to support own currencies. That will make some pressure on the United States dollar, and that could significantly support the gold market. But this is just potentially that could happen. Now, what we should do with these grubbers? Well, of course, they significantly increase the risk of the downward continuation. And guys, if you take a look, these lows actually not as deep as this one. It potentially keep door open for a possible butterfly pattern right there. So theoretically, it might be the butterfly. If situation will start to develop bad, it really might be. Besides, we have the 1595 right there, weekly target that is not completed yet. That's why these grubbers are reasonable in general. So they're not just some consequence of the fluctuations yesterday, but from technical point of view, because of existence of the target, they are, well, important and bring more risk for taking the long position. Should we ignore totally the taking of the long position? Based on the current situation, I still we still could consider it, because we do not know what will happen if the Bank of Japan will come with intervention again. So on the 4 time frame chart, as we suggested, market hits the resistance, conference resistance, and we suggest that let's wait for some pullback and then see what will happen. And particularly speaking, we could focus maybe on the head and shoulders. Now this head and shoulders taking the clear shape, it's becoming obvious, and our suggestion was correct with this pattern. And take a look, let's consider the downside performance, this ABCD pattern. OP, which stands right there, it seems too deep for a head and shoulders pattern. We suggest that right arm should be relatively harmonic to the left one. And take a look, it's perfectly coincides with the 1640, 1635 area, and also this level creates an agreement with this ABCD minor COP extension. That treat this level as the signal level. If somehow market will break it and keep going down, or if we will see something of this kind, this type of action, it will be really fast, an acceleration, because here after this kind of rally we would like to see that bulls control the market, and we would like to see gradual retracement, not fast. But if we'll see something really suspicious, then of course do not take the long position. Just watch what will happen. If you still would like to take long position, take part with these hand and shoulders, trying to take it as close to this level as possible. And do not hide too far stop it. Not necessary to place the stop somewhere below this area. You could place it either below the OP, some could calculate it by yourself with this ABCD pattern, or even right below this area. Because if market indeed stands bullish, it should not break this level, and it should not go too far below it. Some fluctuations here is possible, but in general this level should hold. Alternatively, if you have the bearish view, you maybe could try to take the bet on the grabber against these stops. If you will be correct, the market will take it out with the stop and keep going low, so risk reward will be relatively acceptable. So that's actually two positions on gold market. Both are still valid, and it has chances to be realized in the market. And actually evidence will come when we will see what will happen around this area. That's what become the edge between the bullish and bearish scenario, and depending what market will show around it, this will be the answer in what direction it will go.